Hello, everyone. I am your accounts teacher Akanksha. Welcome to our lesson on partnership accounts. Today we will learn about revaluation of assets and liabilities in partnership accounts. In this video we will understand the basic concepts of revaluation. In the subsequent videos we will discuss specific examples on revaluation of assets and liabilities. Let's get started. Let's first understand the meaning of revaluation. Revaluation is made of two words. Re and valuation. Re means to do something again. Valuation means finding the value of something. Hence revaluation means finding the value of assets and liabilities once again. Under this topic, we will be learning the accounting treatment and impact in books of accounts due to revaluation of assets and liabilities. In accounting there is historical cost principle, which is a fundamental concept in accounting. Historical cost principle states that assets and liabilities should be recorded in books of accounts at original cost rather than their current market value. Original cost of asset means the purchase price, the amount you paid at the time of purchasing the asset. Original cost for a liability can be either the actual amount borrowed or the value of goods received on credit on the date of purchase. Due to historical cost principle, every year assets and liabilities are shown at original cost in the balance sheet. Only depreciation is adjusted for assets. Book value remains the original cost less depreciation, even if the current market value of assets or liability is higher or lower than book value. However, historical cost principle allows revaluation of assets and liabilities in certain cases, like reconstitution of partnership firm. Reconstitution of partnership firm means either admission, retirement or death of a partner or the change in profit-sharing ratio among the partners. Now that we have understood the historical cost principle, let's shift our focus on why revaluation is done. Why do we value the assets and liabilities again? Let's understand this with an example. Suppose a partnership firm has two equal partners, A and B. The partnership firm purchased a land for 10 lakh rupees. Land is an asset for the partnership firm. We will pass the journal entry in books of accounts at the purchase price. The entry passed will be land account debited and bank account credited by 10 lakh rupees. Now, book value of land is 10 lakh rupees. Book value means the value in books of accounts. Due to historical cost principle, the value of land in books of accounts remains at 10 lakh rupees, even if in later years the market value of land changes. Suppose the market value of land after 4 years becomes 11 lakh rupees. Still, the land in the balance sheet of the partnership firm will be shown at 10 lakh rupees only. This gives rise to an unrecorded profit of 1 lakh rupees. This is due to the historical cost principle. Or suppose the market value of land after 10 years becomes 15 lakh rupees. Still, the land in the balance sheet of the partnership firm will be shown at 10 lakh rupees only due to historical cost principle. Here unrecorded profit increases to 5 lakh rupees. This variation between book value and market value can continue and become larger in later years. Let's understand what happens in books of accounts after 10 years. After 10 years the partnership firm has a profit of 5 lakh rupees on land. But this profit is not yet accounted in books of accounts. Secondly, even though the present market value of land is 15 lakh rupees, but the firm is still showing it the land 10 lakh rupees. Now suppose after 10 years a new partner, C, is admitted to the firm. From the date of admission, C will also become a partner in assets and profits of the firm. It means that C will also become a partner in the profit of 5 lakh rupees from the rise in value of land. Think about it. Is it correct to give share in 5 lakh rupees profit to C? The answer is no. Actually, the gain of 5 lakh rupees was generated before the admission of C. So he should not get any share from this gain. What is the solution? The solution is doing the revaluation of all the assets and liabilities before admission of C. and then distribute any resultant profit or loss among the old partners in old ratio. Such profit or loss which happened before admission of C can be present in other assets and liabilities as well. So all the assets and liabilities are revalued. Secondly, such profit or loss can arise at the time of all kinds of reconstitution of partnership firm, like admission, retirement, death of a partner, or change profit-sharing ratio. So all the assets and liabilities are revalued at the time of all kinds of reconstitution of partnership firm. For this purpose, revaluation account is made. The resultant gain or loss, due to revaluation of all the assets and liabilities, is distributed among the old partners in the old profit-sharing ratio. It is important to understand that, under revaluation, we are revaluing all the assets and liabilities from their book value as per balance sheet to their present market value. The present market value is given in question as an additional information or adjustment. Let's now discuss the process of doing the revaluation. In the question, you will be given two kinds of information. First, the book value of several assets and liabilities. The book value can be given either in the balance sheet or just written in a paragraph. Second, the current market value of several assets and liabilities. This is given either as a change percentage or change amount from book value. On account of revaluation, the value of assets and liabilities can either increase, decrease, or there will be no change. Increase means that the new market value is higher than the book value. Decrease means that the new market value is lower than the book value. If question is silent on new value for few assets and liabilities, then it means there is no change. Let's now understand the few points about the language of question. Instead of writing increase, the question can use other similar words, like appreciated, rise, brought up. All these words have same meaning and indicate the increase in value of assets or liabilities. Instead of writing decrease, the question can use other similar words, like depreciated, fall, brought down, or reduce. All these words have same meaning and indicate the decrease in value of assets or liabilities. The accounting treatment will be same, irrespective of the word used in the language of the question for indicating either increase or decrease. Let's understand the amounts we have to calculate in each revaluation adjustment. A revaluation question will give two things: A. Book value of asset or liability, B. Change percentage or change amount. From the information given in the question, we have to calculate two things. First, revaluation gain or loss. This is the profit or loss due to revaluation for each asset and liability. Second, new balance sheet value. This is the new value of each asset and liability, which will be shown in the new balance sheet. On the next slide, we will discuss an example question to understand this more clearly. The example question gives book value of building as per balance sheet is 1 lakh rupees. The value of buildings to be increased by 25,000 rupees. Here the book value as per question is 1 lakh rupees. The change amount as per question is 25,000 rupees. Now we have to calculate two numbers. First, revaluation gain in this example will be 25,000 rupees. Second, new balance sheet value, which will be calculated as follows. Book value 1 lakh rupees. Add gain on revaluation 25,000 rupees. This gives 1,25,000 rupees as the revised value of building, which will be shown in new balance sheet. Another important concept in revaluation questions is the usage of few similar sounding words. Revaluation questions usually can use three different words: by, to, or add in the language of the question. If the language of the question gives by, it means question has given the revaluation gain or loss. It has not given the new value of asset or liability. In such questions, we will find the new value of asset by a formula. The formula is book value, add revaluation profit or subtract revaluation loss, as the case may be. If the language of the question gives either to or at, then it means Question has given the new value of the asset or liability. In such questions we will find the revaluation gain or loss by a formula. The formula is book value less new value. The accounting treatment in, to, and, at questions is same. Let's take some examples to understand this better. Example 1. Question gives the book value of machinery as 1 lakh rupees. The additional information in the question states that machinery value increased by 5,000 rupees. This is a by question. Here the question gives the revaluation gain or loss. In this example there is revaluation gain of 5,000 rupees. We have to find the revised balance sheet value of machinery, as 1 lakh rupees, add revaluation gain 5,000 rupees equals 1 lakh 5,000 rupees. Example 2. Question gives the book value of machinery as 1 lakh rupees. The additional information in the question states that machinery value increased to 1 lakh 50,000 rupees. This is a to question. Here the question gives the revised value of machinery as 1 lakh 50,000 rupees. We have to find the revaluation gain as 1 lakh 50,000 rupees, less 1 lakh rupees equals 50,000 rupees. Example 3. Question gives the book value of machinery as 1 lakh rupees. The additional information in the question states that machinery is revalued at 1 lakh 80,000 rupees. This is, at question. Here the question gives the revised value of machinery as 1 lakh 80,000 rupees. We have to find the revaluation gain as 1 lakh 80,000 rupees less 1 lakh rupees equals 80,000 rupees. Now we move to understanding whether there is profit or loss on revaluation. For each asset and liability as per question, check whether the value is increasing or decreasing. If the value of asset increases, then there will be profit on revaluation. If the value of asset decreases, then there will be loss on revaluation. If the value of liability increases, then there will be loss on revaluation. If the value of liability decreases, then there will be profit on revaluation. Now we discuss why there is profit when value of assets increase, or there is loss when value of assets decreases. Suppose you have a land of 1 lakh rupees. Land is an asset. Its market value increases to 1.25 lakh rupees. Since the value of something you own is rising, so there will be profit. So in case of increase in value of assets there is a profit. Alternately, suppose the value of land falls to 80,000 rupees. The value of something you own is falling, so there will be a loss. In this case of decrease in value of assets, there is a loss. Now we discuss why there is profit when value of liability decreases, or there is a loss when value of liability increases. Suppose you have to pay 50,000 rupees to someone. Later it is found that actually you had to pay 60,000 rupees. Now you have to pay 10,000 rupees more. This is a loss. So in case of increase in liabilities there is a loss. Alternately, suppose you later found that you have to pay 45,000 rupees only. It means now you have to pay less. This is a profit. So in case of decrease in liabilities there is a profit. What if the value of few assets or liabilities does not change? This happens if the question is silent on the revised value of few assets or liabilities. We will ignore such assets and liabilities and we will not do anything. In such cases we assume that there is no change in value of such assets and liabilities. There will be no revaluation gain or loss on such assets. The same old book values will be considered as new values and will come in the new balance sheet also. Let's now discuss the rules for debiting or crediting the revaluation account in the journal entry. If due to revaluation, there is a profit, then revaluation account gets credited. If due to revaluation, there is a loss, then revaluation account gets debited. Now we combine the rules learned in earlier slides and get the following final rules for debit and credit of revaluation account. When value of asset increases, or the value of liability decreases, then there is a profit. So revaluation account gets credited in such cases. When value of asset decreases, or the value of liability increases, then there is a loss. So revaluation account gets debited in such cases. Finally, we come to the format of revaluation account. The format of revaluation account is same as any other account. The nature of revaluation account is nominal account, so debit and credit rules of nominal accounts will apply. All the gains or profits on revaluation will be shown on credit side. All the losses due to revaluation will be shown on the debit side. Please note that whatever we have learned in this video applies to admission, retirement, death of a partner or change in profit-sharing ratio questions. You need not understand the revaluation adjustments separately for these chapters. That's all for this video on revaluation account. This video is a must-watch for understanding the concept of revaluation account. I would suggest you watch this video 2 or 3 times for full clarity. In the next videos, we will discuss specific questions on revaluation of assets and revaluation of liabilities. Thanks for watching. Have a great day ahead.